Welcome to my third annual Top Canadian ETFs to Buy video. Canadian investors that are looking to take a passive approach to investing or buying stocks, this video was made for you. This is geared more for beginner investors, someone looking for a set it and forget it style of investing. Investing in the right ETFs can limit your risk when there's market volatility. I will break down my personal choice for the top 4 Canadian ETFs to buy going into 2023. These have been my most successful videos, so here I am trying to recreate the magic. 2022 was a volatile year with almost every stock and every sector tanking. 2023 will be some people's first time investing during a recession, but that also means it could be the best time to buy stocks. Before I get started, if you're a beginner or new to Canadian finance, I've created a course called Canadian Finance Pro where I discuss budgeting, credit, inflation, managing debt, where to invest, and how to invest for beginners. For the next few weeks, I'm offering 30% off my course. You can use the link I've provided. I'll see how well the sale goes and might keep offering it for longer if it's popular. First up, XEQT. This is the first ETF I'm recommending. I would recommend investing 40% of my portfolio in this one ETF. Currently trading at $25 per share, this ETF is as diversified as you can get. If you invest in this ETF, you'll indirectly own 9,450 different stocks all over the world. This video could end right here just with this ETF, but that would make a pretty bad video. This is the iShares Core Equity ETF portfolio, which probably means nothing to you. It basically means it's all stocks, no bonds, no fixed income. This could be defined as risky since it's all equity, but since you're investing in the entire world, over the long term, I promise you'll be fine. It was only created 3 years ago, so we don't have that much data to judge the performance over the long term yet, but you can see a 35% return since the fund was opened. They pay a quarterly dividend. The annual yield is 1.17% per year, but you're not investing in this for the dividend, you're in it for the capital appreciation. The management expense ratio is 0.2%, which means for every $10,000 invested, you'll pay about $20 in fees. But this is not coming out of your pocket. You don't actually pay this. It comes out of the return of the ETF, if that makes sense. Looking at their top 10 holdings, this ETF invests in other ETFs, which might be confusing, but we can dig deeper to see the end product. Since you're investing in the global stock market, obviously you would expect to see Apple and Microsoft at the top, since they're currently the top 2 largest companies. We can also see where you're investing geographically. 44% in the US, 25% in Canada, and the rest spread out amongst developed countries. I'm comfortable leaving 40% in here and letting it run. I'll recommend alternatives to this ETF at the end of the video if you feel this is too risky and you want safer holdings. XSP is my second choice. This is mandatory, in my opinion, for every portfolio. I would put 25% of my portfolio into this one ETF, which is currently trading at $43 per share. Many of the stocks in here are already included in XEQT. I know that I'm doing it on purpose. This ETF mimics the S&P 500 or the largest 500 companies in the US. These have historically been the best performers in the market and the largest or most important companies in the world. So I want extra exposure to these. The management expense ratio is 0.1%, which means if you invest $10,000, you'll indirectly pay $10 to the manager of this ETF. The largest holdings have a few familiar faces: Apple, Microsoft, Google, Facebook, Tesla, Amazon, etc., etc. The ETF has a rare semi-annual dividend with a yield of 1.07%, but you're not buying this for the dividends. That's just a perk. You're here for the capital appreciation. 2022 has been a bad year for the S&P 500. The ETF is currently down 16%, but this is just temporary. I can almost guarantee it will recover, which is why I'm doubling down on the stocks in this ETF. You can see the 1-year performance is poor, but the 3, 5, and 10-year performance are more realistic indicators of long-term performance of this ETF. The third ETF is one I struggled with. I wanted a strong ETF, but different from last year's recommendation. There are so many good ones, but I decided to add a little dividend power to this portfolio, so I'm recommending XDV as the third ETF. I would allocate 25% of my portfolio to this one ETF. Since my channel is aimed at Canadians and I'm obviously a little biased, having extensively researched most of the companies in this fund, this ETF invests in the 30 highest yielding Canadian companies. Keep in mind, most of the largest companies in Canada pay a dividend, but with this ETF, you'll get paid monthly instead of quarterly, which is a nice little boost to your fund. The yield is 4.53% annually, so investing $10,000 means you'll get $453 per year or $37.75 per month. Normally, I would say, hey, at least you're beating inflation. But with inflation topping 7% this year, I mean, At least you're not losing that much in buying power. The one downside is the management fee of 0.55%, which is the highest on this list, meaning you'll indirectly pay $55 for every $10,000 invested. Most of the TSX is centered around financials, so you'll be 55% invested in the banks, then 12% in communications like Bell, TELUS, and Rogers. Then utilities will be Enbridge or Fortis. All of these companies have been reviewed and recommended previously on this channel before. I might even do a follow-up video for the best stocks to buy instead of just ETFs if there's enough interest for it. Lastly, my fourth and final recommendation, I'm going to get a lot of flack for this. I'm still recommending Canadians invest around 10% into crypto, but specifically Bitcoin or Ethereum. No altcoins or anything created by this guy. I would recommend BTCC or ETHH if you want to buy a crypto ETF in your TFSA to shelter gains. I would prefer holding the coins myself, but this is an ETF video. I can't wait to read all the annoying comments of like, how's your Bitcoin doing now, bro? Like, it's doing great. I've been investing or gambling on crypto for years. It's been my best investment. Bitcoin has been around for 15 years, so if you think it's a scam or you think it's going away, let's chat in 10 years and see where it's at. I currently have around 150,000 split between Bitcoin and Ethereum, which is a little over 10% of my stock portfolio. I'm currently staking them, which means I'm earning a small percentage every month. I'll stop right there. That makes 100%. I mentioned earlier in the video that I'll recommend a safer version of XEQT. Since this one is all stocks, some people might want safer. Safer means fixed income or bonds. I'm not a fan of bonds. I'm not interested in very low returns or safe fixed income. But if you'd like, you can go with XGROW, which is 20% bonds, or even safer, you can go with XBAL, which is 40% bonds. If you look at the returns of XGROW or XBAL historically, they don't provide the same returns as XEQT, but they are safer, and safer means less stress. Thanks for watching. I hope this video does as well as the last one. Please check out my course using the link if you're interested in learning more about Canadian finance. If you're still on the fence, you can sign up for my free ebook and I'll send you more information about the course, not courts. Check it out. I've been kind of experimenting with new lights. I don't know how it'll be. It might be my first and last time. They might stick around for a little more if it looks good on the video. That's all, folks.